Hey, good morning, everybody. I'm Ryan with Propelio. Today, as every Wednesday, is Grant Teach Me Something with Grant Kemp from CreativeCashFlow.com.
What's up, my peoples?
I got volume somewhere. My bad. I broke it again.
I broke it.
Anyway, so what are we talking about today?
So today what we're going to be talking about is customizing your profits to where it's your best deal. Here's the thing is that, a lot of times people you see other people doing deals and you're like, oh, that's a fantastic way to make money. And one of the questions I get from a lot of people whenever they're getting started is like, well, what's the best thing? Like, where should I get started? What's the best thing that we got?
Wholesaling.
Yeah, and it all depends on you. It all depends on what you've got going on.
That sounds like it should be some kind of like one of those posters, like inspiration. It all depends on you.
It does. It all depends on you. Sorry, I'm splitting my attention. I was trying to get in here and get the stream so I could see y'all's questions. But it really does. It all depends on what you have. So if you see in one of the earlier episodes that we did, we were talking about like the yin yang of partnerships and how you've got to use your strengths with other people's weaknesses to capitalize on their strengths where you're weak, right? I mean, it's very important to have that in partnerships whenever you are getting deals together. But even to a wider degree too, you're going to have strengths that are going to dictate what strategy you want to focus on.
Yeah, because there's so much stuff out there. You can get so creative. There's so many strategies out here in real estate. And I actually read an article yesterday from Investopedia about finding your niche.
Okay.
Learn that,
Yep.
and then I actually did put my 2 cents in, which is once you've learned your niche, get out of that and actually learn more.
Mm-hmm.
I think, as you're saying, with real estate, too often we learn, we have our box and we stick to it. And one thing that we've really tried in the past 22 weeks here with Grant is get creative.
Yeah.
Know your box, but maybe open that box a little bit.
Right.
So when you're talking about the profits, about how, going back to what typical people know of, hey, ARV 75% minus, and I make 10 to 12% on the deal because blah, 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 blah.
Right.
Well, that's great, but that's a very, very narrow-minded way of looking at this business.
Yeah, I mean, because you also have to weigh in, again, what do you have? So one of the things that you saw me talk about in our episode about networking with people is always asking the question, what do you have? Do you have time, do you have money, or do you have knowledge, right? I think those are kind of the big three. If you're going to be successful in real estate, those are the big three that you need. You need time, money, and knowledge. Mm-hmm. Now, that time might not be your time. It might be hired time, but it takes time to get things done, right? Obviously, money. Money might not be your money, but it takes money to get things done. Knowledge through JVs, again, might not be your knowledge, but it takes knowledge to get things done. Those are our big three. Now, when you can look at those things, that's going to help you understand which strategy you need to be focused on. Don't just focus on owner financing because Grant tells you owner financing is the greatest way to go and you're going to make so much money and blah, 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 blah. Look at what you've got going for you. So just straight up, do you have money? That's one of the biggest differentiating factors of which side of the fence you need to go on, right? Do you have cash? If you've got cash, guess what? Life is on easy mode. I don't think I'm breaking news to anybody that, hey, when you have money, life is easier, right? But it is on the real estate side. I like the saying about money doesn't buy happiness, but it buys the problems that you want. Right?
And before we get too far, just to stray for a second, is you need to be able to recognize opportunity and whatever that may mean to you. In this business, we're always trying to see deals. We're always trying to just make deals out of thin air. So, perfect example, I was getting out of the car last night, talking to a neighbor, and I live in one of those neighborhoods that's gentrifying very rapidly, where houses are being knocked down every other day. And talking to a neighbor, and turns out they own 6 houses on the block. But they don't, and they own them free and clear, and they want to develop them. And I'm like, hey, well, I mean, do you have the cash for that? I'm like, well, no, not really. I'm like, okay, well, guess what? Guess what I have? I have access to capital. So, the opportunity there of going, look, let's maybe we can do a JV. Whether or not that ever comes to fruition, who knows? But from a little conversation, always have your ears open to those subtle opportunities.
Absolutely,
anyway,
yeah.
Sorry,
you gotta
random.
It's really not. I mean, you got to be the guy. You got to be the girl, right? Whatever. You are the person that can get things done, and that's very important to understand about your situation is what is the thing that you can bring to the table, and then be looking for those opportunities to bring that in. When I'm talking about customizing your deal, that's what I mean. I mean, we are looking at, because real estate, you can cut real estate deals 10 different ways. But we're looking at what is going to be the way that makes the most sense for you right now. So again, I talk about your initial branch. Do you have cash or do you not have cash? Well, if you don't have cash, you're going to be looking at things like wholesaling, owner financing, JVs, that kind of thing. If you do have cash, you can do things like the fix and flips or the buy and holds, or even lending that capital out, right? I mean, there's different things that you can do just from that branch. And then when you're looking at those branches past that point, you've got to look at what situation are you in right now. So for instance, it may be that you're really into whatever, like myself, cash flow models. You're really into owner financing, that kind of stuff. But maybe you've got some lofty goals that you want to meet for this year. So maybe right now isn't the best time to do, and I'm saying this to you, I mean, this applies to me a lot too. Maybe we've got some lofty goals that take capital, that are capital intensive goals. So for myself this year, I am shifting a lot of focus to really pay more attention to cash deals, to pay attention to wholesale opportunities, because we do have some opportunities that we want to use larger capital amounts for that might not come in from a cash flow model, which ultimately makes way more money, but is over time. Right? So you kind of have to look at what's your situation, what are your goals, and then look at deals like that. Now, let's move over to the whiteboard. Conveniently, we already have our whiteboard angle up. So one of the things that I want to point out to you guys, and this has been something that I have a lot of people really latch on to as liking, is just looking at deals from a standpoint of what percentage are you getting it at? And that dictates what you can and can't do with this deal. Right? So down here at the bottom, we've got the fix and flip. Okay? So can you write? I'm instructing Ryan to write.
I don't see anything at the bottom.
So fix and flip. Okay? Now, and for those of you who have not watched in the past, we have delegated Ryan to writing because my handwriting, I may as well be illiterate.
Is worse than that.
So you've got your fix and flip, and you can do fix and flips when you are buying a property at 75% or below. Okay?
And I'll even say, because I know, even though I'm not buying at 78 or 75 or
75.
Well, yeah, I'm buying at 75, but there are people that are buying at 78, 80%.
Right.
And what I would say is I was caution people to be like, I don't know.
Right.
That's a little bit risky, but
yeah.
Whatever.
Yeah, this is going to be our ideal. And again, just like I say, I'm not a lawyer and I'm not a CPA, I'm not your business partner. I'm putting education in front of you for you to make the decision as to what's going to be best for you. You're going to customize even this customization to your situation to see. So if you're a 78% buyer, you're an 80% buyer, cool. But you better know what you're doing.
Yeah, because I would add to that, because, I buy at 78 up, I buy at 92%. Cool.
Do you make money?
Well, that's not me to say.
But it's up to you. So we're going to say 75% and below is going to be our mark.
This year?
Yeah, just throw it over to the side on there. 75% and below is going to be our fix and flip mark. Now, when we are looking at a deal, and again, just to explain this further to people who may not be super familiar with our slang here, when we're saying 75%, we're saying that your acquisition cost and your rehab cost add up to be 75% or less than the after repair value, the ARV. Okay.
And just to throw out a random number, when you're buying at 75% minus repairs, you're probably looking to profit anywhere from 10 to 15%. Because you could take out of that 25% equity, whatever, you can take that 10% out of the equation because of realtor fees and all the other fees.
Right, totally. And even then, it kind of depends on which percentages. Because if you're looking at your returns, if you're making $15,000, let's say that you have no holding costs and you've got your fees and it's at 90, you get $90,000 from this.
Et cetera, yeah.
$15,000 on a $100,000 house. $15,000 versus $75,000, if you put $75,000 in, is a much higher percentage than 10-15%, right, of the $75,000. So your actual cash on cash return might be 20-25 or something like that. But That's a
number.
Yeah, all number. We don't like them number. So 75% and below, we're looking at a fix and flip. Now, your next kind of tier is going from that 75 to 80% mark. Okay, what happens if you are able to contract a deal at 75 to 80%? Well, if you're able to contract a deal to 75 to 80%, then you're going to be looking more at the wholesale option. And I'm talking about this only here in DFW because here in DFW, the going rate seems to be about 82% that houses are selling for, depending on the area. Sometimes those areas that are really desirable, you can wholesale at 85 or 86. Sometimes when they're less desirable, you can only wholesale them at 75. So it does take a little bit of knowledge of your area of understanding, but typically the things that I'm seeing coming out and move are going in that 80, 82.
And here's the irony, I forgot what the word would be, is the only way wholesalers make money is if they're able to sell it to these fix and flippers. So there's plenty of fix and flippers that are dabbling up here.
There are. Well, and also buy and hold people are up in that area, right? And so this is going to be where, like, then we've got kind of our 80 to 85% range that might be getting contracted there. And this is going to be where I throw out my caution flags and say, really know what you're doing. But I'm going off of what the typical, what I'm seeing in the public, right? What I'm seeing in the market right here. And in this range is when you might be looking at those buy and holds. If you're looking for a really long-term income, you've got a rental property, or you're just kind of playing the long game on that, and you're okay with those lower returns for now, this is kind of that buy and hold area. From 85% to 100% is going to be our next realm, and that's where I suggest you really start looking at the owner financing world. The owner financing world, as you can see here, is an excellent complement to your arsenal because you're able to take down deals at a higher percentage than anybody else is and still turning a lot of money with it, okay? Now, once you pass over 100%, that's when you want to call OYES Realty and do a short sale. And I say you're going to call OYES because dealing with short sales freaking sucks. It's silly. And for some reason, the guys at OYES are just crazy, and they will do it for you, and you'll stay and make your money off of that. So I always just send short sales their way. But this,
and to be clear, real quick, this percentage is
of the ARV. Okay, so that percentage is of our after repair value, and that percentage includes your acquisition costs. So what are you paying your seller for the property, and it includes the rehab costs that are going into it. Okay, that's what those numbers add up to. So this is how I look at deals. All right. If you want a nice little cheat sheet for how to decide when you're going to do certain types of deals, this is how I look at it. Now, the thing about this chart that's important is you can go one way on the chart, but you can't go the other way on the chart. Okay? So what I mean by that is if you contract a house that's worth $100,000 and you contract it and you're all in at $70,000, what can you do with it? Well, you can fix and flip it, you can wholesale it, you can hold it, you can owner finance it. This is a little bit of a, you can't short sale it, but that's kind of off on its own. So you can go that way on it. But if you contract a house at 87%, you can't fix and flip it, you can't wholesale it, you can't buy and hold it, you're stuck to the owner financing world, okay? So it's important to understand kind of how these things work. You go one way up the river, not the other way down the river, and you can get your deals working.
And to be clear, we're talking about the back side of the deal. We're not talking about the front side of the deal.
Right.
Because if you, random tangent, if you are contracting at 87% of a deal, maybe you're able to sub to that thing.
Yeah, absolutely.
And then the world's your oyster. Bob's your uncle.
Bob's your uncle?
I heard it on.
That's very British of you.
Is that it?
It sounds like it.
I saw it on YouTube. I was like, we'll throw it out there.
So this is kind of what I want to have you imprint in your head when you're dealing with houses. Now, whenever I'm taking a phone call, if I'm in a world where, and often we find ourselves in situations like I'm making plenty of cash flow, I've got plenty of capital in the bank, I've got the options to do kind of whatever I want to do. Well, at that point in time, I'm just trying to get the cheapest deal I can possibly get, and then I'm going to see where it fits in this chart. Okay? Now, if that situation changes, let's say that you have a great net worth, but you got no cash coming in right now. You can't buy groceries. I always say you can't buy groceries with net worth. You can't go to Walmart and say, hey, do you know how much I'm worth? Give me these groceries. That's not how it works. You've got to have today money to buy those.
I think was it Corey Thompson? He's like, I forgot the quote, but it was like, you know what $1 million whatever, and $1 will get you, and it's like a Diet Coke or something like that.
Right, $1 million net worth
Totally
and $1 in your
but-
pocket. But yeah, that's a really good. I like that. That's good. So you've got to mix that today money and that tomorrow money. So you may rearrange this to customize this for yourself and say, look, when I'm going on these appointments, I'm really needing to focus on these two areas. I really need to focus on getting this contract down here. And if I can't get this contract down here, how can I still make today money with a contract up here?
I can answer this real quick.
Yes.
So, and this is where you need to be creative and always, and that's why I kind of subtly threw it in the beginning, all because I knew I was coming to here. Not really, it just works that way. Is always be thinking ahead and always be thinking outside the box in terms of is how you can make money. So if you are a wholesaling specialist, a fix and flip specialist, but you come across a property where you know you can only contract at the 87% realm, well, what do you think you should do? The correct answer is you get the contract and then you call your Dan Diaz's, your Mitch Stevens, your Grant Kemp's. I had to give other guys plugs before I gave you a plug.
I appreciate it.
But because guess what? You may not make a gajillion dollars off it, but I'm sure they're going to throw you a referral fee.
Yeah, absolutely.
So there's still ways to make money. So even if you are in this world, you still need to know these other worlds.
You're very right on that. That's I
Seizing the opportunity.
I encourage you to have laser focus. I encourage you to be focused. But here's what I always say: like for those of you who have read Good to Great, and if you haven't, you should. It's, dare I say, a great book. One of the things that they talk about in there is the hedgehog principle, is making sure that you're laser focused on stuff. Traction references another book called Focus, actually, and I can't remember who writes it, but basically the point being, hey, the sun puts off billions and billions and billions of kilowatts, I don't know if this is a real number or not, of energy, but if you go stand outside in it for too long, the worst you're going to get is a little sunburn. Meanwhile, a laser puts off hundreds of kilowatts, I don't know if that's a right number, and it can burn through steel, right? If you can focus your energy, you're going to do much better. Now, where I think the mistake occurs for most people getting into real estate is they say, I am going to focus my energy on being a wholesaler. I will only know how wholesaling works. I will ignore everything else, and I'm going to wholesale deals, okay? Then what happens is I come back after they've told these people no, and I contract the house and I make a whole ton of money that they could have made, right? I encourage you to have that focus, but I think your focus needs to be, I am a single family real estate investor, not I am a wholesaler. And if you open your mind up a little bit to that, to know your other options, not saying that you need to spend a lot of your time doing these other options, but to recognize what a deal is that falls in one of these other options, that's going to allow you to leverage that to make your money by contacting somebody like you mentioned that does that stuff and get a fee out of it.
You can't say their names?
I can't. Well, yeah, like Mitch Stevens. Like contacting a me, and if you're in another area, contacting somebody like me, and no, like I love Mitch. Mitch Stevens is brilliant. He's one of the sharpest guys I've ever met, and so he's down in San Antonio. Where is Dan? Is he San Antonio as well? So there's different people in different markets that this is their thing, right? Contact them on those. So,
and if you're in Houston, shout out to Derek Morel. Thank you.
Thank you.
Anyway, because he's
thank
doing
you
this
for
well.
thanking me.
Real quick, before we move too far on, because I know I love to give you tangents. Cameron Jones was asking about where does sub 2 fall in this chart. My answer would be all of it. If you can get a deal sub 2, all that does is allow you to have more creative financing on the front side.
Right.
That being said, typically, not always, but typically people want that cash lump sum. But if you can get a 60% deal at subject to,
right, that's
an awesome deal right there.
So just to clarify this, because I'm a teenager, clarify. I'm going through puberty, give me a break. Just to clarify this, subject to is an acquisition model. Okay. Now, when we're doing deals in real estate, we want to be focused around our disposition. We want to be focused on our exit. You'll hear me talking about backing into the deal, and I think we did an episode on backing into the deal. I'm not I'm not sure. If we didn't, then maybe we'll do that one coming up. But backing into the deal means you start with your exit and you work your way back to figure out what your entry is, okay? So this is our exit right here. I say if we are acquiring at this, we are going to exit with this. Now, Subject 2 is an acquisition model. So just like Ryan said, you can acquire with Sub 2 anywhere here, and that's great creative financing that's going to put stuff on the table for you. Do not sell with Subject 2. If you sell with Subject 2, you're leaving money on the table. You want to sell with a wraparound mortgage at all times. That's how you're going to make the most money on it. And that's a topic for another day, but I just need people to understand that owner financing is a blanket term similar to how we would say buy and hold is a blanket term. Buy and hold could mean that you're renting. It could mean that you're literally buying it, letting it sit vacant, and then selling it in a year. I mean, you wouldn't do that, but and it could be an owner finance model. Owner financing is a blanket term. You've got wraparounds, you've got Subject 2, you've got a bunch of things within owner financing here.
Yeah, you just need to recognize your acquisition side, your disposition side, and have like a big, giant, transparent wall where you know what you're going to do on the sales side from the very beginning from the acquisition side, but you've got to be creative.
Right.
But there is a dividing line between everything.
Absolutely. A dividing line. So we want you to burn this in your head. Now, when you're taking your phone calls, if you're in that situation where you're like, look, I can just take deals. I've got net worth, I've got cash today, I've got cash tomorrow, right? That's what I always talk about. Today money and tomorrow money. If you got both, you can look at all of this, you just talk to them, you get the best deal you can. If you don't have both, you need to start looking at what you don't have and pushing for that, possibly. Unless, like I said, if your business model is, hey, I'm just going to focus on this. But what I'm getting at is maybe you've got a lot of cash because you've been wholesaling a lot. Well, guess what? You've got a lot of capital, you got a lot of today money, but if you stop working, if you want to go on vacation for a month, you're done. You're not making money anymore. You're really weak in this area right here, and you need to start looking at opportunities to find something to make this work, whether that is JVing with a Dan or with a Mitch or with me or somebody else that can come with long-term capital and long-term plays, or it's just doing it yourself, right? Either way, you need to understand that it's time to start customizing these deals to your situation. You've done wholesaling, you've got a lot of cash in the bank, but you've got nothing to take care of your kids. You've got nothing to take care of your 10-year from now money. So you need to start looking at those deals with how can I fit into this model right here.
So where's the meat of this episode?
Well, the meat is really understanding that, hey, because here's the thing, is that this is obvious for us.
Yeah.
But it's not obvious to a lot of people. That's what I'm finding. This right here has been blowing a lot of people's minds whenever I'm teaching. They're just being able to look at, they're like, oh my gosh, they're asking me to write it down and send it to them, that kind of stuff. To somebody who's in the industry, which many of us are that are watching this, it's like, yeah, okay, we've got different options at different percentages. But not everybody watching is in that situation. Mm-hmm. Some people have only been taught, hey, I can wholesale, and that's where I'm going to make money, and that's what I'm going to do. I need you to understand that you have a specific situation different from the guy that's standing on camera telling you what the best model is. And you need to look at your situation and see what that is to see where it fits in this, and then when you're taking your phone calls, steer the conversation into what you need to have happen on your exit. Mm-hmm. Okay? And
all the while juggling your competition, because the competition is most likely going to be doing the same thing.
And maybe. And one of the things that's nice about knowing this...
They're watching Propelio.
Right, yeah. One of the things that's nice about doing this is that when you're on that phone call, you're going to take that phone call and you're going to say, hey, this is, superawesomehomebuyers.com LLC. Why do you want to sell me your house? And they're going to say, well...
If you watch Bryce Larkin, that's from the show Chuck. Bryce McKinley, the right way to take the call is, why are you looking to sell your house today? That was a giant golden nugget. Shout out to Bryce McKinley by subtly throwing in, why are you looking to sell your house today?
Yeah, nice.
I learned stuff here too, guys.
How you learning? So you're going to hear what they tell you, and you're going to start knocking off options, okay? If they tell you, hey, I'm looking to sell because I'm underwater on this house, well, you're done with everything. If they're like, hey, I need to move to another city and I own this house free and clear and now you're down here and you can move it. But then it's your responsibility to see what your situation is and shift the conversation to get into one of these. So here's what I want you to do, and we can leave the whiteboard here. Here's what I want you to do is I want you to actually literally sit down
like we just did
on your keyboard, like we just did, not sit down on your keyboard. And I want you guys, and we did this before, okay? But I want you guys to do this again because we've got different watchers all the time. I want you to put in the comment section, what do you have? What is the thing that you have to offer? Do you have time, money, knowledge? And I want you to put, what do you want? Do you need more cash flow? Do you need more today cash, right? Do you need tomorrow money or today money? And then I want you to look through the comments and actually go and read through them and find people that complement what you're looking for and see if you can work with them. That's one of the cool things about what Propelio is doing here is creating a community of investors that really have a mindset of, gosh, man, we did it last week. Sharing is caring? Yeah, sharing is caring. What's the word? It's not scarcity, it's...
Oh,
we did this last
Abundance.
week. Abundance. You've got a community of people with abundance mentality that are here understanding, hey, oh, and also drop in what part of town you're in. Oh, actually, you know what? I think, yeah, Daniel actually asked that question already. So drop in what part of town you're in, what you got, and what you want.
Yeah, and Daniel corrected me on the quote. It's $1 million in equity plus $1 will get you a Coke.
Yeah, that's what it is. So guys, you know, this is a little bit more of a concise of a lesson, but I want you guys to really get in here. So good, Chris says he's got deals, he needs cash for debt and equity partners. Man, that's great. Chris, what part of town are you in? We need to know what part of town you're in to see, or what part of town you're working with. DeMarcus, he's got time and knowledge. That's awesome. Looking for more today cash. Okay, that's really good. Lots of people, we got time and knowledge. Mitchell Benson got time and knowledge. Mitchell needs money. So read through these things and communicate with each other. You can message somebody even if you're not friends with them.
I will say this, just to interrupt very quickly, because you just said 2 or 3 people that need money. In this market right now, there is a huge dividing line between people that have a shit ton of money and people that have a shit ton of deals. If you are one of these people that say, I need money, you are not doing a good enough job screaming at the top of your lungs that you have deals.
Right.
Because pretty much everybody I know has a ton of money, but they don't have the deals. So right then and there, you are in a better position because there's tons of people out there that have access to capital. Grant has access to millions of capital. Daniel has access to millions upon millions of capital, but we're deal poor. So if you're deal rich, find somebody who's deal poor, JV that, and everybody wins. Bob's your uncle.
You're just gonna start throwing that in for every situation.
I have no clue what it is.
Yeah, so I really enjoy seeing you guys comment here, and I want you guys to keep commenting and respond to the other people that are commenting here and create that conversation. Create that conversation and start that flowing, because these are people that are sharing your thoughts. And Ryan is absolutely right. Right now in this market, everybody has money and nobody has deals. So if you're one of these guys coming in here that says, hey, I got deals and I don't have money, you need to be letting people know. You need to be going to networking events. You need to be watching episode whatever, 6 or 7, where we talk about how to get private money from people. There are a lot of people out there, but you're talking to one. And Daniel is another one of those. There's people on this thread that have that ready to go. So, but specificity is the name of the game. And this is where it all ties together, and we'll wrap up with this and saying the reason why I need you to understand all of these different strategies and the reason I need you to understand what you do have and what you do want is because if you go to me, I have this happen all the time, and you come up and you're like, well, you know, I'm just trying to get into real estate and, you know, we're just seeing how it goes. I'm sending out some marketing. I got nothing for you.
I will say this. You must have done the acting, drama, improv thing, because your normal demeanor is here, but then when you went into that character, you immediately sank in.
Yeah, and it's true, and I did. I was in theater for many years.
We know.
I was acting. But if you've got specificity
sure.
of knowing, hey, right now I got a lot of cash, I need some more deals, or right now I need some more cash flow, but I've got deals coming in. I need somebody who can help me do these. Man, that's how you get something done next week. That's how you work with somebody who's doing the business, and we can say, okay, cool. let's get something done. And then by the end of the month, you're closing with something that's actually going to help you in your long term. So this is great. We got Andrew Webb, DFW, has cash, needs deals. Perfect example, Andrew. Couple of people in Bryan College Station. I got a condo down there. Daniel.
Is it on a golf course?
It's very much not on a golf course.
Well, as Grant's looking through the comments, if you don't mind, please give us a share. You know, you don't really need to share it to all the groups, but, you know, share it on your page. If you know of people that are in this business or struggling in this business or wanting to get in this business, give them a tag or like at whatever their name is in this video. Get them to watch these videos to help them out. Give us some likes, give us some loves. Angry faces, I don't like the angry faces, but give us some love, give us some likes. If you are local to DFW, I will say this for the 30-something people watching right now. We are having our mastermind this evening at 6 o'clock here in the studio. So if you want to come out, just shoot me an email, a text, a Facebook message, and I'll give you the directions. That's my only. I don't really like to promote it too much,
right?
You know, I don't want 800 people here, but
sure,
you know, 30 to 50 is cool.
Yeah, that's awesome.
Anyway, but Creative Cashflow.
CreativeCashFlow.com, guys. If you're interested in learning more about different strategies and learning more about what's going on and having access to a weekly Q&A session that's just kind of, you know, whatever questions that you've got, go to CreativeCashFlow.com. My memberships are stupid cheap right now because I enjoy doing it, and it's a nice side income from it. And you're going to get a great education, specifically on the owner financing stuff primarily, but then during our Q&As, we really talk about everything. And then just join us here every Wednesday. I mean, I love hearing from you guys. If you've got questions, pop them in here. We'll be monitoring this as time goes on. We love having you guys here. And if you don't already have a membership for Propelio, you guys really need to check out Propelio.com. I mean, we're not just doing this. It costs them a ton of money to put this stuff together, and they're doing this because they've got a really good idea of, you know what, there's people out there that need to be propped up, and we were propped up to get to where we are today, and now it's our opportunity to prop other people up. But I want you to reward them by going to Propelio.com. Check out the membership. There's a free trial right there, and it's a stinking awesome piece of software for you guys where you're going to get leads, you're going to get a CRM. They've got websites that you can run your whole website where they've already worked all the copy and marketing stuff out for you, so you don't have to worry about that kind of stuff going into it. I mean, the benefits are just endless. So check out Propelio.com as well.
I also want to try something new in the comment section because it seems like people are always confused on how to build a buyer's list or how to get on a buyer's list. It is so simple. You just go to Facebook like you're watching right now and just get it on there. If you're listening to a podcast, well, go to Facebook. But in the comment section, go ahead and drop your email and just right beside your email, right if you're a buyer, if you're looking for money, or if you've got money, or if you're a wholesaler. Or maybe there's a combination of all of them. And obviously, you're dropping the email to share it with anybody else that may or may want it. So you may or may not get spammed. I don't know. This is experiment. I just thought of it. But if you're like, because I know my house buying email is houses@belmont.ep. So if you're looking for deals, if you're looking for money, if you have money to source out there, just drop your email and go from there.
And I would recommend when you drop it, spell out the word @ so that things that are scraping the internet for emails aren't gonna just get your email and spam you.
So now it's
so do like
harder
Ryan space at whatever.
Yeah, but then you can't copy whatever.
Whatever. Okay,
you
do what you want to do. Do what you want to do. Customize it to you.
And as far as events go, June 12th we will have our next DFW real estate investor meetup. We did one last Monday. It was phenomenal.
It was.
The one on June, you're going to be doing one of the feature presentations. I don't even know if you know what you're talking about yet, but it's going to be a great event. It's going to be our follow-up event. We'll have 10 to 11 speakers again. It'll be the same party, same experience, probably bigger.
Awesome.
So anyway, see you tonight if you're coming out. See you next month if you're coming out next month. Final subtle plugs.
CreativeCashFlow.com, Propelio.com. See you next week.
Anyway, thanks guys. Thanks for the love. We'll see you next time. Give us some likes, give some shares, and slow-mo high five out.
Woo!